Hello everyone, my name is Dan and I have a very exciting video for you all today because in this one I will share with you a simplified ICT entry model that will help you get funded fast. So if that sounds interesting, let's get right into it. Alright, so we will have a bearish entry model and a bullish entry model. We will in depth discuss about both of them. After that, we will go through a set of rules. And after that, I will go over a trade example. We will go over a trade that I took using this simplified ICT entry model, a trade I took on my live funded account. And because of it, I was able to secure around $4,000 in profits on the live funded account. Okay, so let's start off with the first step, discussing these two entry models, starting off with the bearish entry model. So there's just a few concepts that we need to understand in order to be able to apply this simplified ICT entry model. Concepts like liquidity sweep, displacement, or of course, aggressive break of structure. And after that, we also need to know how to identify fair value gaps or unmitigated order blocks. Okay, it is that simple. So let's start off with the bearish entry model. First things first, the first thing that we want to see is a liquidity sweep. Okay, that will look something like this. After that, we want to see a displacement either to the up or to the downside. In this case, because it's the bearish entry model, we want to see a displacement or a aggressive break of structure to the downside. Okay. After that, we will then be able to determine the bearish range, which would look something like this. Okay, from the high to the low. All right, this will be the newly created bearish range. All right, and after that, the last step would be for us to identify a fair value gap or a unmitigated order block in the premium area of our bearish range, which would be around here. Okay, if all these steps are met, then we are able to look for a bearish sell limit. Okay, with our simplified entry model. Okay, it is that simple. But of course, don't worry if it sounds hard. We will go through it step by step. And you will understand everything by the end. And by the end of the video, you'll be able to apply this simplified entry model and get funded with it. Okay, so make sure to stick till the end. Next up, we have the bullish entry model. Okay, so once again, we need to see a liquidity sweep first. Okay, which would look something like this. And immediately after, we want to see a aggressive break of structure to the upside. Okay, aggressive. We always have to see a aggressive break of structure. If we don't, then our entry model won't be valid anymore. Okay, after that, we will then be able to determine our bullish range, which would look something like this, from low to high. And lastly, we want to identify a fair value gap or a unmitigated order block in our area of interest, which is the discounted area. Okay, which is the area around here. Okay, that's our fire zone, so to say. All right, so these are the two entry models. Now we can go over the rules, and after that we will go over the trade example. We will go over the trade I take on my live funded account using this exact entry model. All right, so let's quickly go through the rules. So rule number one will be this: you have to choose the time frame you want to use the entry model on, and this is personal preference. Okay, because this entry model can be used on any time frame, from the 1 minute all the way up to the daily time frame. Okay, you can use it on any time frame you want. It is totally up to you to decide what you like best. You want to be a scalper with it, you want to be a day trader, or you want to be a swing trader. Me personally, I like to mostly swing trade this entry model and also day trade it on the M15. I mostly use it either on the 4-hour or on the M15. But again, it is totally up to you. All right, just know that on the higher time frames, you will have less trades, but a bigger overall win rate. Okay, because there's going to be less noise than on a smaller time frame. But of course, it's pros and cons for both, and I'm pretty sure you already know them. Next up, you got to keep it simple. First things first, you got to wait for a clear liquidity sweep. After the liquidity sweep, we have to see a clean and aggressive displacement or break of structure to the up or downside, exactly as we just discussed. Okay, next up, the entry model is valid only if we have both occurring one after another. Liquidity sweep followed by an aggressive break of structure. If we only have a liquidity sweep or we only have an aggressive break of structure, then our entry model is invalid. Okay? After the aggressive break of structure, we have to identify our range, bullish or bearish, exactly as we discussed up here. Okay? Next up, after we identify the range, we need to look for a fair value gap or unmitigated order block that is lining up with our area of interest. That's how we will look for our entries, okay? By identifying a fair value gap or unmitigated order block that is lining up with our area of interest in our discounted and premium areas. And that being said, if you're interested to see the trades I am taking every single day, feel free to join my SMC trading group. It is the first link down below. Feel free to go ahead and check it out. And lastly, regarding our rules, we need to place our entry using a fixed risk management plan. And I would suggest risking 1% each trade. Of course, this is again personal preference, but I would highly recommend to use a proper risk management plan and stick to it. Okay. And then we do have some few keynotes that we need to keep in mind, okay, before we will get into the trade example. The first one will be to avoid ranging markets with this entry model. This entry model works best in a trending market, so you should definitely avoid ranging markets. Secondly, if you don't see a aggressive and clear break of structure, stay on the sidelines. Like I said, if we have a break of structure, but we don't have inefficiency left behind, a fair value gap or a unmitigated order block, then we won't consider the entry model. Okay, we need to see a clear and aggressive displacement. Okay, if we don't see it, then we won't take it. And again, if inefficiency isn't created after the aggressive BOS, stay on the sidelines. Okay, we gotta keep it simple. And lastly, like I said, keep it simple and don't force setups. Less is always more. Okay, so now let's quickly get into the trade example that I took on my live funded account. But before we do, make sure you are subscribed. Make sure you are subscribed and let me know down below in the comment section if you like the video so far. Okay, so I will actually use the bar replay for this trade to show you step by step my my thought process behind it. All right, so yeah, I think this is exactly when I was like, okay, we might have a trade opportunity on Euro JBP. So check this out. First things first, what do we have up here? We have a very clear liquidity sweep. We can also delete it to see perfectly that we have a high here. Price went for a higher low, then swept liquidity with this wick right here. Okay, very nicely. So this is a textbook liquidity sweep, which again is our first step. After that, what do we want to see? After that, we know from our set of rules that we want to see a aggressive break of structure or displacement to the downside, because this is the bearish entry model. Okay, we want to see a aggressive displacement to the downside, and that's exactly what we got here. Okay, a aggressive break of structure to the downside. We can see by the momentum of these bearish candles, and it's very clear to see that we left some inefficiency behind. And then the third step is to identify the newly created bearish range, okay, which in this case, it is this one here, from this high to this newly created low here. Okay, very simple, very clear. We are respecting every single step. Now, the next one will be to identify either a unmitigated order block. In this case, we don't really have a unmitigated order block in our area of interest, or a fair value gap. But we do have a fair value gap right here. Okay, we can see that the low of this candle doesn't overlap with the high of this candle right here. So that's a very nice fair value gap there, lining up perfectly with our area of interest. Okay, so yeah, now all the steps are met. We can now look to place our sell limits. And personally, I like to place two orders. I like to place the first one here, the stop loss right on the 100 level, and take profit right here. And the second entry would be around here at the 79 level, and stop loss there, and take profit. Last take profit would be here. But on this specific trade, I think I closed earlier because it was Friday, and I didn't want it to hold over the weekend, and that's why I don't think I held the trade towards the last take profit. But again, this is really up to you as well. You don't necessarily need to enter like this. You could also use the fair value gap as your entry, have a smaller stop loss. You can also pick a order block to place your entry on. And again, there will be pros and cons for all of them. Okay, you might have a bigger risk to reward because we will have a smaller stop loss, but in the same time, you'll also have a bigger win rate. So to be fair, I would leave this part to you to decide what will be best for you, okay, in terms of how you will enter and exit the trades. All right, so yeah, now let's play the price and see exactly how this trade played out. Okay, so okay, boom, right here, both of my entries were triggered, and as we can see, it was a instant sniper entry. Very, very beautiful. Both of the trades were triggered, and now I was running in some very nice profits. Again, running very beautifully, and I think I closed on Friday. Like I said, I think I closed this trade on Friday. I'm not sure if I let it run towards the last target, but we'll yeah, I think this is yeah, I think this is where I closed the trade, around this price here, probably, yeah, around here. And yeah, I will also attach a picture on the screen right now to see exactly that I actually took this trade on my live funded account, this exact sell limit on Euro JBP. All right, and I will also attach a screen record to see that I took it on my live funded account. And then on Monday we can see, Tuesday actually, sorry, on Wednesday, sorry, we can see that that's when this trade hit the last target as well, for a total of around 6R. Okay, so on this trade we had a 3.6R, and on the other one we had a 2.4, so in total a 6R gain based off this ICT simplified entry model. Okay, so step by step, this is how to use it. Like I said, feel free to use it on any time frame you want, but just make sure to stick to the rules we've just discussed about. Okay, and yeah, that being said, let me know down below if you enjoyed this video. If you did, make sure to subscribe and like it, and also feel free to share it. That'll be very much appreciated, if of course you found it valuable. And let me know down below if you want more videos like this one, videos where I will go over the trades I am taking with this ICT entry model, or if you want to in general have more trade breakdowns, because I'll definitely keep that in mind. And of course, if there's any other video ideas you have, as always, make sure to drop them down below. And till next time, a very cool ICT trading strategy will pop on the screen right now, the ICT Silver Bullet strategy. You should definitely go ahead and check it out, and let me know in the comment section of that video if you enjoy it or not. Until next time, I want to wish you all the best and take care.